The Federal Reserve has announced that it is increasing its interest rates by 0.25%. This has many wondering if they've missed the opportunity in buying or selling a home. Well, let's put things into perspective. The last time the Fed raised the rates was almost a decade ago, and the iPhone didn't even exist. Interest rates in the United States have been close to zero for, like I said, almost a decade, and this was done intentionally to keep unemployment low, the unemployment market, as well as to help the stock market recover from the crash of 2008. So for new home buyers, the expectation of a rate hike has caused a lot during this past summer to get a loan and to buy a home, because there's been talk about the interest rate rising. And the Fed just raised the rate as of December 2015, like I said, 0.25%. But the moderate increase shouldn't spell doom here if you're looking to buy a home. In fact, it may give you the extra push here to get out there and get a mortgage and look at homes before the Fed decides to raise the rates again, which many are predicting will happen in 2016. Some are predicting that it could rise to at least 1%, if not higher. So the question is how will rising interest rates affect you as a buyer? Well, the Fed's decision shouldn't affect your interest rate as much as you think. While the interest rate policy will change on how interest rates are offered, mortgage rates actually function separately are in fact more volatile than the Fed's interest rate. The rates for new fixed mortgages not only fluctuate on their own, but they have changed in anticipation of increased Fed rates, even though there wasn't any change in Fed policy. So when you look at the volatility of what rates have done around what the Fed is gonna, quote unquote, going to do over the past year, there have been a ton of change in the mortgage rates. Some companies have had a change of 70 basis points of movement in a 30-year fixed mortgage over the last 12 months. So rising interest rates don't mean that you can't afford a mortgage that works for you. The rate hike by the Fed is minor and isn't likely to squeeze too many consumers out of being able to buy a home, but you may have to reconfigure what you put down versus what you pay monthly. So the bottom line is you still have the right opportunity to buy a home at historical low interest rates, but these rates are going to continue to rise now throughout 2016 and perhaps into 2017 as the economy continues to improve. So if you're looking to buy a home or looking to put your home on the market, the time is now, and the sooner the better, before interest rates continue to go up. Now, we at Dwyer Properties can help you. If you're a home buyer, we can help you find out what you qualify for, point you in the right direction with the right mortgage company, and walk you through every step of the way. If you're a home seller, we can do a custom market analysis to see what your home is actually worth and get it on the market and make it attractive to buyers.